Ladies and gentlemen, on behalf of Kaptify Consulting Investor Relations team, I welcome you all to the Q4 H2 and FY26 post-earnings conference call of SKP Bearing Industries Limited. Today on the call from the management we have with us Mr. Srinand Palshikar, Chairman and Managing Director, along with his management team. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management team to briefly run us through the investor presentation for the period ended March 2026, the growth perspective and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Firstly, hello, good evening. I am Shripada Patil, CFO at SKP Bearing Industries. I welcome you all for the Q4 and yearly earning call. Some of the key highlights of the past year. We can see the revenue from operations has increased by almost 99% from year to year, half yearly comparison. EBITDA by 30%, PAT by 41%, and consolidated revenue by approximately 82%. For financial year comparison, we can see that revenue from operations has increased approximately 53%, EBITDA 11%, PAT 15%, and revenue from operations consolidated 46%. A few highlights for the plant 2 roller. We were approximately 110 tons per month with a utilization of 90%. Now, since the ball plant has shifted, we have space for expansion, of which expansion activities have already started, and some of them have already started in production. Also, simultaneously, stabilization and debottlenecking of other operations is ongoing. Our strategy is emphasizing on high quality products for import substitution, as well as some low hanging fruits where attractive margins and better product lines and new opportunities are available. We have balanced out our portfolio so that we are diversified across automotive, bearings, industrial, and other sectors. And we are expecting to ramp up our production line along with the new capacity additions. For plant 3, last year we had commissioned our new facility of 2000 metric tons per annum, and that has slowly increased in utilization. As compared to last year, we are in a better position this year with the clients who have started as well as production which has increased. We have a good market opportunity available in view of the advanced stages of BIS and QCO implementation. We see a positive market situation ahead. We have achieved ISO certification and we are now eligible for other certifications as well. Our strategy in France is also playing out well, where premium customers have rejoined us, and we have a positive order visibility for the coming financial year, as well as the key strategies which were planned for cost improvisation and improvement, that is also playing out well. I have already shown the highlights, so I will not detail this further. A brief on the capacity, as I have already explained earlier, with the space at the roller plant available, we have started expansion activity. So in the last Q4, our capacity is approximately 1700 per annum. It's only installed last Q4, and of which 78% is utilized. So we can see the utilization ahead. Similarly, for ball plant, as compared to last year, from 240, we have increased to 340 utilization. But there we have a 2000 ton capacity added, metric ton capacity added. A geographical revenue and industrial revenue contribution for the standalone. Even though we see that FY26 is only 4% of the revenue as compared to 5% last year, it is still better because our absolute or revenue has increased. So overall, the export value has increased. Even in our industrial contribution, we can see that our portfolio is very much diversified between commercials, two-wheelers, aftermarket, automotive, and other sectors. A brief about us for those who are new to our company. SKP was founded in the year 1991. We started with needle rollers and then expanded into other product lines. We have cutting edge technology and advanced testing equipment in house, and we are a wide range of products under a single manufacturing roof, and we are renowned for being the global source for global customer. A brief on our journey: we started in 91 in our old plant as a partnership firm. Then we expanded into cylindricals in 2004. 2006, we started our renewable energy initiative, which which gave good yields, because of which we increased that sector further. In 2011, our founder was awarded the National Award for Outstanding Woman Entrepreneur of India. In 2018, we acquired an existing steel ball, and then in 2020, we further expanded these fronts. In 2022, we became a listed company on NSE SME. And in 2024, we acquired a 95-year-old French plant valued at Quarant Industries. And in 2005, we are further expanding the existing verticals into new plants. Our board of directors, Mr. Shinant Parshikar, he specialized in production and manufacturing, and he's a master in this field with knowledge of over 35 years experience. Mrs. Sangeeta Parshikar, founder and non-executive director. She's experienced on the financial side and the presidential award winner. Mr. Rajiv Lokre, non-executive independent director from the technical side, and he's been on the boards of many renowned companies. And Mr. Gautam Ganguly is a new addition to our board of director. He's an independent director, chartered accountant, and company secretary with over 50 years of experience. Plant 1, from where we started, which is now into research and development and machine building. Plant 2, specifically for needle, cylindricals, and special products. Plant 3, which was commissioned last year, specifically for ball manufacturing. This is our French plant, where we have a different range altogether. Our products: needle rollers, which find into applications into automotive bearings; cylindricals, which also find their application into gearboxes, bearings; pins for gearboxes, bearings, defense applications, crank pins, and many more. Balls, there again we have a variety of balls with miniature, satellites, SS, glass, plastic, which find their application in not just cycles or stirring applications, but as well as in cosmetic, pharma. Here it opens an entire new market to us. For wide industrial applications, you can see our products go into luxury watches as well as industrial machinery, EVs, two-wheelers, commercials, wind turbines, pharma, aerospace, as well as precision parts. Uh, with the acquisition of France, we have a better position to supply to a global market. So on the screen, we are showing you the strengths of both the plants. So in India, we have a scalable manufacturing capacity as well as balls and rollers both, and renewable energy integration, which is a big requirement for global supplies. And also, in view of the latest technology, we have involved AI in our production processes as well. Uh, for France, we have a European market footprint over there. We become a dual source for global OEMs to supply from France as well as India in times of such turbulent market situations. We are specialized in stainless steel products over there, and we have better access and faster access to OEMs. Some of the photos of our inspection lab. Our strategy for profitable growth: we plan by new products, new customers, operational efficiency, and new technologies. Some of the key strengths is like we are a integrated supplier, so you don't find so many products under a single roof, and that to a global OEMs. So global customers who are into multiple continents and multiple countries see SKP as a stable source, as they have only one vendor to add, which can cater to their entire global demands. And that is the strategy which we are playing out for both our plants, as well as technology exchange and research exchange and knowledge exchange. Market overview. We are seeing a good market traction for the industry, Indian industry. Our green initiatives, the way forward. Now, for the coming years, we are planning on optimizing the existing ball plant. The capacity is added and the utilization is increasing. For France as well, we see a major 2-year milestone which is completed, and we are seeing a good organic growth over there with customer base expanding. Roller capacity is also increasing, as well as the utilization is similarly increasing because we have order visibility. Our strategy for growing the export is playing out well, and we are seeing the results in our this year's financial as well as in the coming years. We are looking forward to it. And with in view of our global strategy, we are taking on key global customers as well. And our revenue target for FY29 is for India entity standalone to become 100 CR. With this, I would like to close my presentation, and I would like to hand over to Vinay sir to please.
Thank you,
Thank you for
Shivana.
the
Yeah, go ahead, please.
thank you for the opening remarks. All those who wishes to ask the question, we use the option of raise hand. In case you are unable to raise hand, just drop a message on the chat box and we'll invite you to ask the question. We'll take the first question from Gunit Singh. Gunit, you can go ahead, please.
Hi, thank you for this opportunity. So, the purchase of traded goods have gone up from less than 1 crores to around 10 crores in Q4. So, I would like to understand what kind of traded goods are these? Are we entering into some trading business? Can you give in detail what this is?
Yeah, I would like to. There are three things actually which are interlinked because these questions will be having effect on three elements. So, which I would like to clarify in one shot. This is one type of. We were already dealing in this particular product line. Now we have a global opportunity because of our global presence, and we have this particular opportunity which has come up very recently. And we were working on this particular opportunity to encash so we can get a global footprint. So it's a major related to the exports, number one. Number two, this is major. We were already handling this particular business, but to a very small extent. Now we got opportunity, we expanded. So we have a more credit lines for this particular thing. So you must have seen this quantum has gone up. Number one, it has got an effect on receivables. So the receivables also have gone up. Now this activity has come all of a sudden, is very quickly because this is interlinked with our global customers and their needs. So we have to give them a basket as an offering. So when this has come as an offering, so it has gone up. Our receivables have increased. All of a sudden, this business has come, so we have to inject. So the loans have increased, unsecured loans from directors, and this particular amount has increased. I hope I have answered your question.
I understand about this opportunity of some trade, but what are these traded goods? What business? Is it the same?
Mostly it is related to our product line only. So some other input, raw materials, input things which is available, like we are already doing it. So it is, they wanted a basket, so they want a product along with this. So our same line of product.
Got it. So we are not producing these goods, so that's why we are procuring it for our clients, basically.
Correct.
So
Correct.
what are
Something
the
like that.
what
We
are
are
the
already producing it. We are
Okay.
already producing it. We are doing some value additions, but we better because this is like a very small contribution of manufacturing. So we prefer to put it in the traded goods.
Got it. So, I mean, what kind of margin profile would these traded goods have, and what
This
percentage of
is like a
revenue?
very small minimal margins. This is not a focus. The focus is the main core business.
Got it. So, what percentage of revenues this year came from this trading, and what about FY27?
This particular element is going to remain. It will be more or less on the same extent, but I think this is the threshold. This will remain to the same extent. because we are doing a lot of other business along with this particular element. So the amount and all this exposure is going to remain like that.
And the margin profile would be lower than our business. If
Lower,
you
yeah, of course,
quantify.
lower. This is a high value on basket transaction. So yes.
Okay, got it. So for a standalone margins, I mean, they collapsed to 23% in Q4. So can you help me understand what were the main reasons for this?
Uh, can you just, how do you calculate
EBITDA
23%? You said
margins.
collapse, you said.
EBITDA margins.
Uh, can you,
So
because I
standalone
don't
EBITDA
see
margins in Q1 were
standalone, you said.
30%. Yes. In September quarter, they were 40%. In December quarter, they were 31%. But they have fallen to about 23% EBITDA margins for standalone business. So what is the
Okay.
reason for this fall in EBITDA margins, fall in EBITDA?
One of the main reason which I am aware, that is the reason is because of the new labor code. This particular things, which is, there are many provisions we have to make for gratuity, provident fund, the salary liabilities, many things. So which is to be provided even for the leave, we convert it to the amount, and we have to put as a provision. So these, because of the code, these provisions as per the auditor's requirement, so these provisions were made. So higher provisions. This is the reason.
Got it. And our French subsidiary, so it made a loss in FY26. So what is the expectation for FY27? Do we expect still a loss?
Uh, Maybe or may not be. We will be at the threshold limit. We are focusing to turn it around in the current financial year.
Got it. So, I mean, what is stopping the French subsidiary from breaking even? Is it because of lower utilization, or I mean,
Yes.
if I pose it differently, at what level of revenues will it break even if that's the case?
To be very precise, if we are around 3.6 million euros, we will be doing break even 3.6, 3.7. Okay. And currently, the loss is because we are still not at break even, because we have still not received all the customers back, which we were slowly getting. We are adding step by step the customers.
Got it. So you think in FY27, I mean, what is changing? Is our order pipeline stronger? And do we
Yes.
foresee breaking even and doing such kind of revenues in FY27?
Much better. Those, I think you have not tracked the company since past, but if you would have tracked it, you would have understood it. We are progressing and progressing in a much better way, and this is also helping India entity. It's just not the French entity, because we are getting many global clients because of this particular acquisition.
Got it. So, realistically, we can expect the French entity to break even and, I mean, cross that $3.4 million threshold that you mentioned.
3.6, something like that.
Got it. So my final question would be one of a question related to the margins itself. If we look at the employee benefit expenses, they have not increased much, but the main cost item is purchase of trade and purchase of stock in trade, which is pulling down, I think, the EBITDA margin, if I'm not wrong. So, can you like help me understand? Like, still, I mean, is this trading business the component which is pulling down the EBITDA margins? And if so, what
Not exactly, because we don't do any this thing activity with a negative margins. Of course not.
what are the
But
margins in this trading business, if you can quantify?
that I'll have to check exactly to be very precise. But it is positive. It's not negative, of course. And this particular factor, that how much the effect of the raw material contribution, this I'll have to look at and give you the exact figures.
All right, perfect. So I'll touch base offline then. Thank you very much.
Take the next question from Varun. Varun Jain. Varun, please go ahead.
Yeah, hi sir. Thank you for giving me the opportunity. I'm very new to this company and to this space in general. But just going through your numbers, so I saw that at some point you have given a target of FY29 100 crores revenue standalone, and your current is like FY26 is 80 crores. So in the next 3 years, you are just gunning for a 20-25% growth. So that seems very low, right?
We could do better, much better.
So I mean, is that a very conservative target? Like
I
I
think
was
it's a
like,
conservative. It's at 100 crore. That was for a roller division.
okay, and also, sir, I saw that there is this ball plant which has come up. So, at what utilization level does that become EBITDA break even?
It's already break even. There's nothing like break even because whatever you are seeing is an overall basket, total consolidation. So nothing like that. So we are already green in that. What we are focusing is better margins and better utilization. So we are focusing on better customers uh, revenues now, more customer to add in our basket in ball division. That is our focus.
Okay, so but how much in how much time will it reach the consolidated company margins? Any estimate?
The utilization level of say 80-90% of the ball plant, our target is to reach as early as possible because we have the capacity available, we have the capability, everything is availability. Now it's the customers what we are focusing, targeting. These customers, they are major importers. I think you have not previously tracked our things, but then all these customers what we are focusing are the already the importers of steel balls. So our target is very clear, defined. So we have the volume visibility, the customer visibility. With many of the customers, our commercials also are settled. Now, with some customers, the ramp up already started. So you must have seen the numbers have changed in quarter to quarter basis, if you must have observed. But our target is to have a quick better utilization. That is taking more time than expected, but yes, we are on the right directions, so there's nothing wrong in the direction, but it is taking more time than I anticipated.
Sure, sir. And sir, at some point, I read that company is also present in defense and aerospace applications. So can you tell us like what defense and what aerospace applications you have? And as a percentage of your total revenue, what is that? And is there a different margin in those? Because usually those products have a very high margin profile. That was the logic of asking this question.
SKP is present in these both the sectors since a very long period of time. Okay, defense also very long period of time, maybe more than 2 decades we are present in this particular sector. Okay, the revenue percentage revenue is not that much as to that you can say okay you are 4%, 5% or 6%. So it's very small compared to the other sectors. So that is the reason that we have never say that okay that we do this particular sector, that sector, like that we don't do. But we are catering to defense sectors, and we are also now in discussion with aerospace companies. So it's both the things are already on the radar and already in existence. But the
No.
portfolio value is so small. Of course, the margins are good because depending on the product, and there you have a very clear, defined quality requirements, pricing, everything. So margins are good. There is no problem for the margins, but the volumes are not so big as to that you can say, okay, you are catering to this and this.
No, sir, may I ask that what application in defense and what application in aerospace, like in which division and which part, like whether it is going for ISRO or for tanks or what? Can you just give us some more color there?
I'm really not sure as to how much I can disclose on a public platform, but I can give an idea as to we are into uh, uh, means artillery equipments like that. So we are present in that particular. In aerospace also, we are discussing on the bearings, aerospace application bearings. We are right now being contacted by a major automotive, aerospace company who are already into this particular segment. They are uh, being given one of the award. So they have contacted us very recently. So we are standard product. It's a standard product. What we are already doing it. We already told them we are already doing this. So it's a same platform. So we are catering to defense in artillery equipments, frontline movement equipments, defense equipments, like that. And for aerospace, we have not asked them for the applications, but we know that it is for aerospace application because we know the customer.
Okay, sir. And just the last question from me. So, what is the customer concentration at your company as of now? So, what percentage of revenue is coming from the top 5, top 10 customers, and who are the top 3 customers, if we can get to know?
Okay, I will not disclose the name of the customers, but I can tell you the revenue percentage. None of our single customers more than 15%. So maximum top 3 or top 5, if you take, none of them are having revenue more than 15%. So between 10 to 12, 13%, like that, the revenues are there.
But that would imply that the top 5 customers make more than 50% or close to
No,
50% of the revenue.
Yeah, maybe 50, 60%. Yes. Top 5, top 7% customers will, top 10 customer will contribute something like 65, 70%, like that. Yes.
Okay. Okay, sir. I'll take it offline sometime. Thank you and all the best.
Thank you.
Thank you, Varun. We'll take the next question from Tanya Kalra. Tanya, you go ahead.
Good afternoon, sir. Thank you for the opportunity. My first question is in the roller division, the management has guided expansion from around 120 tons per month to 200 tons per month. So, could you share the current installed capacity utilization levels and also the expected asset turns once the expanded capacity stabilizes?
Tribada, can you answer that?
Yes. As of Q2, that is the half year of FY26, the capacity was at 1320, that is 110 tons per month. Then with the more space utilization, we had already started expansion activity. So we have just recently added further capacity in Q3 and Q4, which is shown in the slide at 1700 total. Further up to 200 tons per month, that is on the way, which is expected to be completed in this half year, that is FY27. And regarding the utilization that is already mentioned in the slide, approximately 70-78% utilization of total 1700 is done. But that is again, it is a staggered approach. So that cannot give a proper clear estimate because installation, commissioning, as well as utilization, all these activities are simultaneously ongoing.
Okay. And what incremental revenue potential do you see from the newly added capacities over the next 2-3 years? And also, what kind of EBITDA margins should the investors structurally expect from the roller segment versus the legacy ball segment?
I think we can just cross multiply, like currently at 1320, whatever revenue we are making, when we do 2400, how much that revenue will be. For the roller business, it will be similar trend. For the ball business itself, will be on a similar trend. The margins will be on that itself. Exact figure I'll have to calculate and give you. But that will be again a futuristic figure.
Okay. The next question is that since customer validations for the expanded capacities were reportedly completed ahead of schedule, are there already committed orders or visibility from existing customers to absorb this incremental production?
For roller division?
Yeah.
Yes. We are having a visibility for orders.
Okay. And my last question is, what proportion of the upcoming growth would come from existing customers increasing wallet share versus onboarding new customers and geographies?
I think it is a balance out of both because we are having new as well as existing have also increased their share. So it is both ways. Also, new customers are global requirements, which is why they are coming with a bigger chunk. So I think we can get a better estimate of these in the coming quarters, quarter one and quarter two. We'll be getting better visibility.
Okay,
We have
that's it
focused
from
on
my
global
side.
customers, and these global customers coming huge global volumes. So it will be like from India being exported even to China. So that is opportunity what we are knocking to, which is an almost impossible task, which engineering good being exported from India to China. So that sort of a situation is going to come because these are all global customers.
Okay, sir, that's it from my side. Thank you.
Thank you, Tanya. We take the next question from Rudraksh Rahecha. Rudraksh, you may go ahead.
Yeah, thank you for the opportunity, sir. Sir, first question was on the sales levels for roller plant and ball plant for last year, FY25.
Sorry, sir, can you repeat the question? We didn't really understand.
Yeah, revenues from roller plant and ball plant for last year, FY25.
Segment breakup, you mean?
Yeah.
Yes, okay. Segment breakup is given on the second last page. I'll just tell it over here. For the Mulchand plant, segment revenue was 60.84. Jammer plant is 26.04. And for the France plant is 24.62. And the profit before tax?
No, ma'am. I was asking last year figures. This is FY26.
Okay.
I'm asking for the figures for FY25.
25. Okay.
Yes, ma'am.
I'll have to just check those figures. I don't have it on hand. Maybe we can take this particular question after some 5-10 minutes. So I'll get
Yeah,
this.
no problem. I'll just get on with the next questions.
Yes.
So, ma'am, I wanted to get a better understanding on the margins part. I think previous participant also highlighted a few things. Labor code and adjustments we could understand, but a lot of profitability volatility is witnessed on the gross margin level. So, if I talk specifically about numbers itself, in India business, if I look at the gross margins for the latest quarters, it is at 37%, which is the lowest we have ever witnessed for the company. And generally, we are above 70% here. So maybe could you help us understand this part?
Can you just go to that particular slide, Shripada?
In the presentation, we are not capturing the gross margins, huh?
Okay.
Yeah.
So then this particular point we'll have to analyze and revert back to you.
Okay. Okay. Understood, sir. Let me come to the segment figures for ball and roller plant, which we report. So if I look at the revenues from roller plant, it's at 53 crores and a profit before tax of 10 crores almost. But if I look at the 6 months figures, it was at 24 crores and 7 crores PBT. So margins have declined from 29% to 19% for the whole year. So could you give us a little bit of clarity on what happened in the second half for the roller plant?
Stock and trade, I think. So
Shripada, can you just answer this particular question from factory side?
okay. Sir, we are talking about second half of the roller division,
Two half
right?
comparison. They are asking for two half comparison. Correct.
Okay. You want me to display the screen?
You can.
Yes, sir. Now, can you please repeat the question?
Ma'am, roller plant, we did around 24 crores for the first 6 months and 7 crore PBT. And if I
Okay.
look at the full year figure, it's 53 crores in revenues and 10 crores PBT. So we have taken a hit on our profitability in the second half of this year. So maybe you can help us understand that.
Okay.
No,
Okay.
this is actually we'll have to go deeper into it. See, it's often to reply on this because there is. I can tell you one thing: there is no change in model. There is no change in the profitability ratios. There is no change in nothing. Everything is okay. Finance cost, yes, it may have increased finance cost because we have taken unsecured loans all of a sudden. So this finance cost, there may be a change. Okay. Labor code, so related thing, whatever has come is one-time expenses because now it will be on the routine basis. So whatever provisions were made, it has to be provided once. So it is already provided. But there is no change in the profitability side from our product. So we are okay with all the factoring, so there is no change in any of the operation side. That one thing I can tell. But to go deep and to analyze this particular thing, probably you'll have to have one-to-one this particular thing. We can take, not a problem at all. But it's model same, no change in model and style and functioning of our products.
Also, besides that, there was one more point. In the first half, we had booked single depreciation, but then our auditors recommended that considering the operation utilization of the current plant, we can book double depreciation for. So that is one which had affected. Also, in the second half, we had extra provisions of bonus and gratuity and other which came into requirement as per the new labor law. So both these again affected in provisions which came. So all these came in the second half itself. Bonus, gratuity, and all payables. October bonus, yeah. All even everything. This year, ones which have already to be given and ones which are to be given. Both.
Understood, ma'am. So if I look at the whole year, not going into like too much details or specific, the data that is available on the slide itself. So at this point of time, we are doing around 19% margins on roller business for whole year. If we look at the slide, the data is already there. So this 19% margins, ma'am, is that sustainable going forward, or we should see some expansion or contraction from here?
I don't.
There's no reason. There's even these fluctuations. See, no change in model. So it's the same. Little corrections is there because of the higher certain cost. So these all our costs are temporary. So nothing like from our management side of view, I can assure you one thing: all our models are very stable. No change in top the cell pricing pattern or manufacturing cost is all already optimized. So there is no change in effect on margins or anything. It could be whatever is there is maybe 1 quarter basis or 2 quarter basis, the effect is there. But it will again bounce back. Everything will come back to the original level, what you were seeing maybe 1 year back or something like that.
We don't
Got it,
expect
sir.
it to go down.
Got it. One another question on sir ball plant. We are saying for the full year again. That is something that is available on the slide itself. We are doing around 25 crores in revenues, and profitability stands at around 7-8 crores. So that translates into a much higher margin than the roller business. But our understanding was that ball business is like lower margins than rollers. So could you help us understand that?
It could be that because of the traded product is from that particular divisions what you do. That is why you see the margin shift. But no change in model. Again, I explained to you, no change in model. The segment revenue what we booked, maybe the trading that the stock in trade or whatever this particular activity is more concentrated from this particular plant. So that is why you see this particular. That's it. But no change in thing. Ball is lower, it's as it is. Roller is higher, it's as it is. So no changes in that.
Understood, sir. Understood. And sir, for next year, what kind of growth can we expect from the roller plant?
Already Shripad has answered that particular thing. Now what we are talking of the utilization level. So we have the visibility that we have. It's not like that we are expanding, so we do not have the visibility. We have the customers, we have the visibility as to what targets we have to reach. But you can understand it's an engineering industry and hardcore engineering. So it requires a lot of efforts to bring to the utilization level, just not from the customer angle. Customer say, okay, I can place the order for X, and okay, you reach to the capacity utilization. But to the ramp up the capacity and to sustain qualitatively, quantitatively, it's not just we are talking of numbers. What we are talking of a very high precision, sustainable precision level engineering product. So it's not it's a commodity product, it's a high precision level product, so we have to have a very high sustainability of the product performance. So it takes a little time for the manufacturing point of view, not from the customer's point of view. Customers a very clear visibility. We can do even more utilization levels, even more capacity. Even if we had, we can get to more capacity utilization. We have that much of uh, uh, customer demands. There is no problem for demand. We have a good demand. How fast and how, because it's a lot of technologically processes involved, so it takes little time on my team to get up.
Understood, sir. Understood. So, last question on the France entity. You said that we are trying very hard to achieve break even this year. You have given some figures also that may be required to get there. But uh, could we at least expect that half of the losses would be reduced for this year, even if we don't achieve the break even for whatsoever reason?
See, from visibility point of view, we have a visibility to reach to this particular level. It's not like that we do not have the visibility. So there are two things. One is the lack of visibility. It's not there. It's the visibility is there that these targets are possible to achieve. Okay. Now is the customer which we are pushing, and we are focusing on the customers which were lost to bring back. We are facing a little delay or little challenge in this particular, because when these customers were lost, they lost to someone, maybe a European supplier, or maybe out of European supplier, maybe an Asian country, India or China or anyone. Okay. Now to bring back to a European manufacturing facility, to convince him that the product what he is going to get to the European standards with the next quality level, but their expectations is a commercial also. So now you need to match these two things. We have been successful to match to some of the customers, and the volumes have come back. Now, slowly we are attacking these all customers, trying to convince them. The visibility is there. I see a very positive outlook. There is no problem. Maybe loss, very little loss. I cannot quantify what would be the loss. I cannot say I will make it to 50% or 25% or maybe turn around total. But yes, our trend is positive. Yes, focus is very clear. We have to turn around this year. So that's what the target is.
Got it, sir. Got it. So, thank you for your detailed
One more thing I want to highlight here, because many people have asked me these particular questions, and I would like to answer in general to this particular. A turnaround is always a top side and the bottom side. Bottom side means when you have a expenditure. So it's just not the top line what we have to expand, it's also the cost we have to control. So we are just not focusing on the top line. Of course, it has to grow, nothing like that. But also you need to control your costs. So we are doing our level best even to control these all costs by high productivity, new engineering designs, new solutions to bring back the cost, bring down the cost, So these all things are also very interesting, and let us see.
Understood, sir. Understood. So rest of the questions I'll take offline. Thank you so much.
Thank you.
Thank you, Rudraksh. We'll take the next question from Rohit Balakrishnan. Rohit, you may go ahead, please.
Yeah, hello. Am I audible?
Yeah, fine.
Yes, sir. Good afternoon to everybody. So just on the French entity, so maybe just to understand, like we've seen this year, the top line has improved. So, and you've been talking about the customers who were there with the company prior to the acquisition, then going away, and now you are slowly sort of getting them back. So maybe you can share like how many customers there were there in the last financial year, that is FY25, and how many customers are you serving now in FY26, just to get some sense.
See, it's not fair to be like discuss name of the customers or anything like.
No,
but
I
I can
don't.
tell you.
Yeah, just number
Okay.
broadly number. I don't want the names as such. I'm just trying to get a
Okay.
sense that, yeah, let's say we were doing X number of customers in the first year of acquisition. In the second year of acquisition, it is X plus Y or whatever. So,
Okay, we have added multiple customers. I can tell you one thing, and
okay.
these customers are on top of the line, Top of the line means top of the line. I can give you one name. Of course, I'm not sure, but I can say,
So we can,
the top line for this particular one of the topmost. Can you know who is the topmost? Yeah, back to us.
so we can give just numbers. Like first year of operation, we had so and so customers, 10 customers, 5 customers in this
Yeah.
way.
First year we had only one customer.
We had multiple customers. It's not like that we have 2, 3, 5, 10, maybe more than 10, 15 customers, because we have multiple sites globally. So many customers were back from the first day of the operations. But I can tell you one thing, which is not many people are aware of. In 2010, 2011, this particular company was doing 16 million euro. How much? 16 million euro in one point of time. Before we did an acquisitions in 2023, this unit did around 8.5 million. In 22, they were around 80 million. They did 23, 8.5 million euro. Now you can imagine, from around 8 million euro, we were down to just 25% level, just because change of entity from VG to SKP. Now you can imagine the loss of revenue. We were never expecting this particular such a loss of thing, but many customers said the legal entity change again, entire thing. Second, legal entity change, we need to have a sustenance. You have to have the credit positive. So many customers, so many questions, so many hurdles. Some customer, they understood that a company is sold in Europe only when it is making losses. An Indian company taking over a European company and now bringing it back to the track. So, and I'm confident. I am fully confident that we will get back majority of these customers. Of course, we are trying to give them a good pricing. We try to give them a good product. We are just in time to them. But yes, so we have a good customers base. We are adding also the same customers. Also, we are adding. Our SOB is increasing. Share of business is increasing. They've already told us that if you give us good quality, good quantity, good in time, our share of business will increase. That's what is the achievement.
And sir, in the presentation on the French subsidiary, we have mentioned about a customer key customer that we have won, and there is a potential of about 100 crores by FY30. So, can you maybe talk a bit about that? Like, this is like,
Yeah, there are 2, 3 customers we have been discussing past more than 2 years. The day we acquired, we have been discussing with them our product costing, commercial settlement. Some customers are so big, they have made something like 100, more than 100 plants globally. So they say that, okay, for your sustenance, you need to prove yourself that you be sustainable in Europe. Okay, so we are now sustaining. They see we are sustaining. They want a credit positive. Okay, we will turn around, we'll become credit positive. Then they will come back. It's nothing like that. They know us, they see us. Their vendors are our customers. But the main customers, which was our customer till 31st of January 2024, before the first day of our acquisition. And now this customer, big customers, they have millions of euros of revenues on yearly basis. So we are discussing, and let us hope they come back as fast
no,
as possible to
I
focus.
think you mentioned that we have
Yes,
secured them as a customer. So
yes, yes.
just
Actually, the thing
Many,
is,
many customers we have secured. Many customers we have secured. Many customers which were already there, their volumes have increased. They give
right.
us a volume, start off volume from 20%. We have now gone up to 50%, maybe 60%. So it's both addition of customers, addition of business, both.
No, no, sir, I understand, but I was just asking that this specific customer that we have, I mean, you've called this out. So I'm sure there must be something that we also feel quite optimistic about. So maybe just on this point is what I wanted to get some clarity.
So basically, it is like Sir has said, we have on our portfolio customers who are having global more than 10, 20 plants. So these
Right.
customers, when they have started, they have an order projection for lifetime volumes or for the near 5 to 7 year volumes. So
Hmm.
this is the visibility from which we have shown it.
Okay, wow. So I mean, today we are a 100 crore company. You're saying that this alone customer can get us to that size. I mean, of course, we may not get to that 100 crores, but there is a chance that this single customer can be as big as the company. Is that how one should read it?
It should be actually it's brands usually, brands, and they have multiple entities under. So it's
Sure, sure.
that way. Yes.
Okay, I got it. And two questions. One was, sir, on the ball business. So we have improved our volumes this year on the expanded capacity. So where do you see, let's say, end of next financial year, where do you see the utilization in ball business?
Hello,
Can
Shripada. Yeah, I can answer. See, currently the capacity what is available, we have a very clear discussion with the customers as to allocation of this particular percent of capacity to this customer, this percent of capacity to this customer. So we are already having a capacity allocations targetive customers. Now these targetive customers, uh, various stages of processes, some particular samples, approvals, testing, some validations, various stages. That is why we have a slow increase. It's not all of a sudden increase, so slow increase there. So the ramp up is taking more time than expected. We were expecting when it is all meeting all the requirements, should be ramp up, should be immediate transition, but it is not taking. They are taking that, okay, we do a step by step increase. So this is, so let
No,
us
no,
hope
fair
by
enough, sir.
this year we have a
Yeah.
60, 50, 60% utilization level in current year. Maybe better in next year utilization. By next
Okay.
year, we have a complete utilization.
So you are expecting 50-60% in a good case scenario in ball plant. And so this traded sales that you talked about in the opening statement. So this is in roller or this is in ball or this is in both?
Uh,
The traded
this
sales
is
as a
like
part of the
it's a part of our basket.
Yeah. So is that in the roller business or is it in the ball business?
Not exactly both.
It will be in both. Would it be
It's
possible
something which
to?
is related to the inputs of raw material.
Okay. So just wanted to understand, is it possible to just broadly quantify how much would that business, like, I mean, how much would it traded
It will be
I mean,
same. I've already explained. Same quantum.
same, sorry. I mean, so for example, if we
Last year will be around 10 to 12 crore, I think so.
Acha, so it will be the same, you're saying?
Yes, same level. Because we have a very clear tie-up for that.
Okay, so you're saying that in H2, the volume, the number would have gone up because, and hence the
This
margins.
particular business started as in almost last quarter.
It started in the last quarter, you're saying?
Yes.
So this opportunity came to us in the second half of the year, and then it
Okay.
started materializing in quarter 3 end and quarter 4 overall.
Okay.
So
Okay.
even in the sheet which we have mentioned, it is again showing that the purchase of stock in trade, if you compare
Right.
half year to half year, it's increasing. And also
Right.
this is why it is pulling down the margin of the standalone as well.
Yes, ma'am. No, I understood that. I'm just saying that is it was so essentially from the last year to this year, the last year this portion was very little, and this year this has grown from that base. Is that the right understanding?
Yes. Yes.
See, I would like to again
Sure.
a very clear view. I would like to give you this particular thing. We are very transparent. We have shown very clearly that even though it's a manufactured good, but we have shown because we do very little value addition this, so we consider it's not a true manufactured product. So we consider as a traded product. You understand?
Right.
Many people would have done this way that okay, you club it to the main revenue, so you will not do it segmentation. SKP, we believe in very clear and transparency to our investors. We have to be very transparent and show okay as to yes, this is a thing and this is a long term and this is a low margin but a high value quantification, and we get a basket, we get a something which is overall gain to SKP. So we have to show that as a different activity. It would have been shown as a combination of activity, but we do not believe in that particular thing. That is why we have shown very clearly. That is why you see a significant increase. That is why you see a significant impact on many front, receivable increase, loans
Right.
increase, quantum increase. But we are very transparent and to show that okay, this is the reason. Because of that, this is the thing. Yes, I hope I'm very clear and
Yeah.
very transparent to everyone.
Yes, sir. Yeah. And so this will continue going forward, sir, this line of business?
Yeah, because
Now?
this is a very long term, and
Okay.
it's a good business. It's nothing. It's a very good business, huh? Please and see, it's very simple. I don't know. I mean, past 30, 40, 50, 60 years, anytime US dollar or euro has gone up against Indian rupees. Means other when the Indian rupee has become stronger. So you can
Hmm. Understood, sir. I think this is it from my side, sir. I think if I have more questions, then I'll come back. Thank you so much and all the very best for the coming year.
Thank
you. Since there are no further questions, sir, would you like to give any closing comments?
Would like to give one clarity about SKP. We have very positive, very positive outlooks for future. We are getting good levels of customers, the customers we can never think of. Our visibility of future expansions seems so clear and so thing. We are adding value-added products to our kitty. So many value-added products will be added. They are in different stages of validation. So for revenue, for visibility, for future business, a very good this thing. For margins, they are sustained. There is no change. One-time activity here or one time because of that, the impacts may be seen, but long term, no change. We are very fixed revenue model. our costs, our everything is the way it is. So no effect on that. Any investors or any person who wants to visit, we can visit us with a prior appointment. We are always welcome our investors, and we are very transparent to. This is a level of transparency we believe in. So that's what from my side.
Thank you.
Thank you
Thank
very
you to
much.
Thank you to the management team for your valuable time, and thank you to all the participants for joining on the call. This brings us to the end of the today's conference call. You may all disconnect. Thank you.